Welcome back to our YouTube channel, Buzz of FX. Today we are going to talk about how you can trade against the spike on Crash Index. Whether you're a beginner or you've been trading for a while, today I will show you how you can trade against the spike. Trading against the spike is a bit more risky, especially when you have no clue of how deep the spike can go into your equity. So with that being said, I would suggest you pay good attention for making attempts or even betting your money. So understand how to do it. Don't jump into it. Yeah, it may look simple at first, but I guarantee you that it's not simple. Okay, pay attention. Watch this video over and over. Once you understand it, no one can take it away from you. All right. Really risky. It's not like trading the spike. Trading the spike, when you're trading with the spike, it doesn't really go deep into your account, okay? And your stop losses are always respected when you are trading with the spike. But whenever you are against the spike, your stop losses are not respected. No matter how many pips of stop loss you keep, if the spike gets up there, it will dip in, like it will slash your account in a way that when you see it, you won't be happy with yourself, okay? And if you are someone, or if you're a trader who has been trading this for a while, okay, I would say no problem. You can just watch this video, pick one or two things that can help you update or upgrade your own system in a way that at least you can be able not to dodge all the spikes, but if you can dodge 40% of the spikes out of 100, you're still good. Let's dive in. First, let's go and add the first indicator, which is a moving average. We need to add a two moving average in this system. So the first moving average will be moving average 14. The method is simple. Apply to close. You don't have to add anything on the shift. Then on the style, you can put any color you want. So now that we have a white background chart, we can leave it as red. Let's make it a little bit bolder. Then the second indicator will be another moving average. This will be moving average 8. Okay. On the method, you change it to exponential moving average. See, change it to exponential. Apply to close. So here we can change our color to, let's say, green. The last indicator is an oscillator, relative strength index. We'll be using relative strength index, period 10, apply to close. On the style, we have a white background on this chart, so we need to change over our style to, we can still use red as well. So on the levels, if you have the other levels I gave you on, there's no problem. But if you don't have it, you can just use these levels, 10, 90, 50. Okay, it doesn't change anything. For me, I use a lot of levels. I just play around with this. So but if you have the previous indicators I gave you for trading spike, like the previous levels I gave you for trading spike, you can still use them. They are good. Okay, nothing changes. And besides, what we are going to use today, that has nothing to do with the levels. Okay, so whichever one you have, you are good. Now here on this area, we can leave it on this color, this dark here, or we can change the color to black since we have a white background chart. Now we have our three indicators: two moving average, one simple moving average, the other one is exponential moving average, relative strength index. So these are the three indicators we'll be using. You can trade against the spike in two ways. One, you can either sky or you can day trade. So whenever you are on the lower time frames, like 5 minutes, Okay, some people likes to scalp these movements, like from this movement here to this end, right? So people likes to, scalp all those regions, all this. It's not bad. It's not bad. Once you know how to do it, if you think scalping is all you want to do, that's fine. If you're someone like me, then your best friend should be H1, where you can just take advantage of the market and capture all these longer moves that may take you few days. It takes few days to complete. So let's go into how you can trade this. So to trade against the SPY, if you haven't watched the video about divergence, I would suggest you go up and watch that video about divergence so you can understand what you are doing here clearly. Okay, if you know about divergence, then good for you. Here, whatever we do here will not look that confusing or complicated to you. We are looking for where the first moving average, the 14 moving average, and the 8 moving average cross each other. Our major signal to get into a trade, apart from the crossover of the 14 moving average and the 8 exponential moving average, is divergence. Or in a scenario where the market shows you the crossover of the two moving averages, you just mark it on your paper. Okay, first signal passed, and the second one should be passed before you can start thinking of executing a trade. We should call it, the first signal is divergence, the second signal is the crossover. Divergence is when an asset price moves in the opposite direction of the technical indicators. So let's get into the chart. Here we have a divergence in front of us, as you can see right here. Okay, here you have a low, you have a lower low, right? Here you have a lower low, you have a low here. Instead of having a lower low, you have a high. Whereas here you have a low and there is a lower low. You go to your RSI and you mark it up. You can see that here you have a divergence. That is number one signal. Then second signal should be the crossover of the two moving average. Here you have the crossover of the two moving average. Here they cross each other. After that, what happened? The market rallied up. So in this scenario, let's assume this is what's happening now. Our first target should be this high on our left side. You can first target this high, first target, second target, then your last target will be here. And if we are to squeeze this chart a little bit, you can see that all those areas were smashed, and even the market kept on going higher, right? So here the market also shows a retest. The market retested this high, this zone, just went up and came back to retest that same high before continuing upward movement. Going back to what I said before, first signal, you see a divergence. Second signal, you wait for the moving averages to cross each other, like what happened here. Right after that, you make your entry. So your entry should be at this candle. This is where the two moving averages cross each other. This will be your entry point. Your stop loss will be below this low here. Keep your stop loss below this low right here, and your first take profit right here, the second take profit right here. Always remember this or write it down. First, you see a divergence, mark it out. You wait for a crossover, the market crosses over. That candle closes above. Second candle that is coming, you are in. Drop your stop loss below that low. Here, there is another example here as well. This is a divergence. Here, you have a low, you have a lower low. Here, you have a low and you have a higher, right? So, where is our crossover? We have our crossover within this region, right? So, if you are to enter a trade around this region here, your entry point below here, first your take profit, because here you only have on your left, you only have one movement. So first take profit here, which was also taken out. After executing your trade, the next area your eye should go to is the left side, where you need to check how many levels are there for me to target. So in this scenario, we have one level here to target, so chase it. An example again here. Here you have a low, you have a lower low, which are divergent. See, divergent pattern. Here you have a low and you have a higher. So, like I said, look at your left. Here we have our crossover. That's where the crossover happened. So in this movement, where will be our target? We look left. You have a level here, and a level here. Okay. Our first take profit, we are to enter from here, should be this. Second take profit here. Or third take profit here. So you really need to practice good risk management. Don't be in a hurry to make it. It's a gradual process. We are not all wired the same. Okay, some people are wired in a way that they can be doing 5 things at the same time and still be good. While some people are wired in a way that you need to do one thing for a while, like for a certain period of time, before you get used to how those things act and behave. So you need to like do some analysis on yourself. Are you good with trading 5, like trading crash index 1000, crash index 500, crash index 300? Are you good with trading 3 of them at the same time? Or are you going to be someone like me who picked one and focused on that one? I only trade crash index 1000. So any day I open something like V75, maybe I'm just bored and I feel like, okay, let me see what is happening there. I'll just check it. Maybe I'll trade it for that day. That's it. So I would suggest pick one, be it crash 1000, be it crash 500, or be it crash 300. Practice on it. Don't just bet your money first. Practice on demo. See what works. Given what I just explained now. If trading against the spike doesn't work for you, see, maybe you should try trading with the spike. Video is already there. The indicators, the strategies, I've already kept it there. You don't have to pay anything. All you will pay is just a little time to watch these videos over and over until you understand. After watching them, you practice what you watched. Practice and practice and practice. Practice with them first. But at the end of the day, the choice is yours to make. I only gave you a suggestion and my opinion based on the experience I've had for a couple of years that I've been trading this stuff. So I'll see you on the next video. Please try to check the video about divergence so you will understand how to trade divergence, how to know when the market presents you with a divergence pattern, so that you don't mistake something else with divergence. Thank you and see you on the next video.